Hi Mark, thanks for joining us. So we're just going to have a quick chat about the impact of the budget this afternoon and our initial reaction. So before we get into that, do you want to give us a quick introduction to who you are, where you're from?
Yeah, thanks Dave. I'm Mark Williams. I'm from Western Union Business Solutions. We support businesses in managing their global payment process and mitigating FX risk.
Brilliant. So I think it's fair to say that the run-up to the budget was full of speculation about tax rises and how this was perhaps the most important budget for a generation. And so there was lots of interest really in the in what Rishi was going to talk about today. So what actually happened? I don't think the tax announcements were as big and as broad as we perhaps expected. The headline grabber is probably going to be the corporation tax rise to 25% from from April 2023, which is interesting. So over recent years, probably the last 10 years or so, the government have been reducing the corporation tax rate in a way to incentivise international businesses to come and set up in the UK. So this is a bit of a U-turn really, but not necessarily a surprising one. The Conservative Party manifesto mentioned something called the triple lock, and basically that was the promise not to raise the rates of income tax, national insurance and VAT. When you look at the total tax revenue that the government collects, the four biggest ones are income tax, national insurance, VAT and corporation tax. So the triple lock takes care of three of them, so it only really leaves corporation tax to be looked at. So there's a lot of speculation in the run-up to the budget that corporation tax rates would rise, and it's perhaps politically easier to do that because only profitable companies pay corporation tax, and so I think it's easier to stomach profitable companies paying slightly more in tax. The way the rise is going to work is businesses that make profits of more than £250,000 a year will be subject to the 25%. Businesses that make less than £50,000 profits per year will stay at the current rate, the current 19% rate. And then businesses in between 50 and 250, there'll be a tapering. You might think that the threshold of £250,000 is quite high, but for lots of companies, or lots of clients that we look after, they have more than one company in the group. Mm-hmm. In that kind of scenario, that threshold, the 250,000 threshold, is reduced by the number of companies that you have. So if you had two companies in your group, it's effectively 125,000 each. So, you can envisage a situation where you've got half a dozen companies all doing different things. Before you know it, the threshold of 250 isn't actually that high. So that's, as I say, it is quite an interesting U-turn from the government really in their approach compared to the last, as I say, 10 years or so.
Just on that corporation tax piece, I'm interested to get your thoughts on the implications that might have on the appeal of the UK market for international business. We're obviously at a point now where, Brexit is behind us, and we're certainly starting to look forward at the opportunities presented to British business that might exist in the future thanks to newly formed free trade deals, and one trade group in particular which the UK has applied to join being the Trans-Pacific Trade Group, which is an 11-nation agreement. Do you think that there is a risk that in any way the UK market might be seen as less appealing for international business now on the basis of the future increase of corporation tax?
I think the short answer to that question is yes. I know during his speech, Rishi was quite clear to point out that 25% is still a comparatively low rate when you look at the G7. But it isn't necessarily the lowest, and there's lots of other jurisdictions not that far away, Republic of Ireland being a great example, where the corporation tax rate is significantly lower than that. And it's the whole reason why we see lots of multinational large businesses, large corporate, based in Dublin. And that was the reason really why the previous approach of reducing corporation tax was taken. The government wanted to try and incentivise these multinational businesses to come and set up base in the UK. So increasing that rate now to 25, I can't see how that's going to be a positive impact to those multinational businesses while looking at potentially coming to the UK. So yeah, I think to answer your question, I think the answer is yes. Yeah. One of the other announcements today was the new super deduction for plant and machinery. So what that means is businesses who are looking at purchasing plant and equipment, so think commercial vehicles, think machinery in factories, think furniture in offices, think ovens and kitchen equipment in the hospitality sector. They're from the 1st of April, when they purchase this kind of equipment, they're going to get this super deduction, which basically means 130% of the cost of the plant and equipment will be deducted from the profit. So the current system, up to 100% can be deducted. So let's say you spend £10,000 on a machine, your profits for tax purposes would be reduced by 10,000, and you pay your tax on that reduced profit. From the 1st of April, that same £10,000 machine, your profits will be reduced by £13,000, and so you now pay tax on the lower amount. So what's key here is any businesses that are thinking about purchasing plant and equipment this month, March, they should really probably hold off doing so until the 1st of April so that they can benefit from that new super deduction. Sticking with businesses, one of the other announcements was an extension to the rule around losses and the carryback of losses for over 3 years. So under the current system, losses can be carried back 1 year. So many businesses will have made losses in the last 12 months because of COVID. In theory, they could carry that loss back, offset it against the prior year profit and get a reduction of any tax paid. What's been announced today is a temporary extension to that rule whereby you can carry that loss back not 1 year, not 2 years, but 3 years. So it gives you a greater flexibility in terms of how you can use that loss. Take a restaurant business, for example, probably made a loss in the last 12 months. Debatable whether they're going to make a profit in the next 12 months. And so for a business like that, it's a great change, really welcome change for those businesses and to give them that increased flexibility. Moving to personal taxes. So because of the triple lot, it's limited on what the government were prepared to do. One thing that they did announce today was freezing the personal allowance and also freezing the higher rate threshold. Amongst the tax profession, freezing the higher rate threshold was not that surprising, not that controversial. Freezing the personal allowance, though, I think was a little more surprising and a little bit more controversial. Rishi talked about how starting to repay some of that debt needs to be fair. Freezing the personal allowance is primarily going to impact the lowest earners. Take somebody earning £15,000 a year, they're going to feel a real impact of freezing that personal allowance.
It's really interesting what you say about tax, Dave, and particularly, hearing some of the announcements today in terms of the timelines for the increased tax in the future. One of the concerns that markets had ahead of the budget today was that any short-term increase in taxation may create a headwind that impedes the UK's recovery from the pandemic. Obviously the economy shrunk by 9.9% last year, and the financial support schemes probably prevented a far harder impact, but in turn created quite a significant amount of debt that most people acknowledge will need to be repaid at some point and will be repaid through taxation, right? It's in the short term, we are coming out of survival stage now, and we are looking forward to recovery stage, and it's ensuring that there is ongoing support for businesses as they need it to be able to recover, to enable the economy to grow again, so that we can start to pay back this deficit at a time where the economy can sustain it and where it's not going to detrimentally impact businesses too much on their recovery path. So I think from that perspective, some of today's announcements will be quite well received. If we look kind of down the line, we've probably got certain announcements on a taxation perspective that will be welcomed for the next 2 years, but not so welcome in 3 or 4 years' time as we start to see an impact. The hope, of course, there is that the economy will have recovered and businesses will be strong enough to be able to sustain these increases over time. If we look at the direct impact that the budget may have had on markets, it's minimal. Much of what we heard today from Rishi was expected. We've read it in the press, we'd seen it on the news. There may have been a few surprises and a bit more clarity that came out today, but largely markets were muted because we knew what to expect. Markets are also trading based on outlook at the moment. We've seen extreme volatility over the last 12 months in the FX market. At the peak of the pandemic, or the first peak of the pandemic, going back into April, May time last year when the economy was deliberately closed, we didn't quite know how long this was going to last. It was speculation as to how deep felt this was going to be. And there was complete risk-off sentiment, which meant that the pound actually met or saw multi-decade lows against the dollar, for example, which for some exporters in the business community may have been seen as quite welcome because they were able to trade at low levels that they haven't previously experienced. But for many importers, it presented some significant challenges. Now, with the market looking forward from that point now, and the success of the mass vaccination programme here in the UK, the fact that we are leading the world essentially, second only to Israel, but certainly first in terms of the major world economies, has given a great sense of optimism around the UK's ability to recover. That's what continues to drive markets. And many forecasters are suggesting now that the economy could recover at a more accelerated level than was previously anticipated. Bloomberg have suggested that the UK economy could grow by as much as 7% in the second quarter of this year. However, the caveat to that is that the government issued bonds, the debt bonds that have been created, have become less appealing and begun to be sold off because the recovery is thought to perhaps be accelerated and quicker than expected. This means that the yield on those bonds has had to rise to try to entice appetite. But the increase in the yields on these bonds as a standalone has meant that the deficit has increased by around £10 billion just in extra interest added. So it goes to show you that we are still trading in quite a sensitive environment at the moment, and how quickly this sentiment can change, because that risk-off sentiment created by the bond situation did impact on the pound, did impact on stock markets and equities as well. I think looking forward for businesses trading internationally, although the pound has been very well supported and the risk remains primarily to the upside, recent events and market movement does show that the risk remains on both sides of the market. My message to businesses trading internationally who have been a passenger on the ride of volatility over the last 12 months would be that risk remains on both sides of the market. And where that has a direct impact on your trade, you need to ensure that you have a resilient risk management strategy that is robust enough to be able to weather any storm and withstand any adverse movements, but flexible enough to enable you to participate when the volatility is favourable at those higher levels.
Thanks, Mark. I think that's really good tips for businesses going forward, and a really interesting insight into how the budget impacts markets. So thank you very much for your
thanks, Dave.
For your input. Cheers.
Thanks.